Hey guys, welcome to the webinar where we're going to be showing you some of our bots and some really cool things. Actually, we have a few new things to show you guys today. So thank you very much for attending. We're still waiting for a couple more people to show up, but I can kind of get the ball rolling a little bit right now. First things first, I'll let you guys know that we are live on YouTube as well. All right, so actually, let me share my screen here. So we are live on YouTube. So if you actually go to our YouTube channel, Lumiwealth, right? So basically just open up, and this is actually, if you guys want a recording of this afterwards, right? So go to youtube.com, search for Lumiwealth, which is the name of our company, L-U-M-I Wealth, right? And then you'll see our YouTube channel here. You also see that we're live streaming. So this video here will actually turn into a recording afterwards, right? So if you go into Lumiwealth channel, right, you'll see that it's actually there. While you're here, make sure that you also like and subscribe to our channel. We're sending out tons and tons of free stuff all the time. So you'll get to see some of our new algorithms. You'll get to see, our options course when it comes out, some of our new algorithms for options. We have a lot of interviews. We actually just put up a couple of interviews with some very good people in the investment industry. So if you actually take a look here, we interviewed the CIO, Chief Investment Officer of a $600 million fund about 2 or 3 weeks ago. So we put that up here. We have some things on crypto. The CEO of Cent Finance, Uzair Kidwai, was on our channel as well. So we have lots and lots of really good stuff happening on our channel. So make sure that you like and subscribe to our channel, and that you push that reminders button as well. All right. Okay, cool. So let's get started. Right. I'm just gonna switch over here. Okay. So this is our agenda for today. So first, want to get to know a little bit of who is on the call. So get to know you guys a little bit. Tell me a little bit about yourselves, that sort of thing, right? And then we're going to do a little introduction kind of to Lumiwealth and to the course, very quick introduction. Then we're going to talk about algorithmic trading and why we care so much about this. We'll show you some of our trading returns. I can show you in a few different ways actually now. We'll show you the code, right, that we're working with, and then we'll do a demo of some of our bots actually working, so you'll be able to see that. Then after that, we're going to tell you a little bit about our course, what courses we offer, and that sort of thing. And we'll answer any more questions throughout the entire presentation. Feel free to ask questions throughout. You don't have to wait until the end. Feel free to use the chat or the Q&A button. You could use either one to actually communicate and ask questions throughout the whole thing. So don't feel like you have to wait until the end. All right. Okay, great. So first of all, let's get to know you guys a little bit. Just let me know what your occupation is, if you know how to program, and how much investment experience do you have, right? So you can type that into the chat, and we'll be able to get to know you guys just a little bit, right? I can tell you guys how this is for me. So we got one chat here. So we have, so you're a banker, nice, it's great. I used to actually be a banker too, which is very cool. I used to work on Wall Street a while back. Of course, used to a long time ago, like coding, I guess is the answer. Yeah, to program. Yeah, that makes sense. Cool. I think you're actually, and a lot of investment experience. It's great. Awesome. So you have a lot of investment experience and you're working on, basically applying code to the world of finance, right? So you're in very good company here. Actually, a lot of our students have a lot of finance experience. So get to know people with a lot of finance experience. You'll get to know people with a lot of programming experience as well, right? Okay. I'll let the rest of you guys answer these questions. Let's type it into the chat for whenever you're ready, right? And we have one here. Kyle, software engineer since high school. I guess you in programming. Great. Awesome. Cool. Very nice. We always get like a mix. We get a mix of people that either have a strong finance background and want to apply coding, basically software, to the world of finance. And we also get pretty often a lot of good coders that want to apply their knowledge to the world of finance, right? So we kind of get a mix of both. And the classes are actually pretty cool because you'll get to know, depending on what your strength is, right? You'll get to know either programmers that could help you out with what you're doing and kind of either mentor you or you could work together on projects, that sort of thing. Or you'll find someone, if you have really strong coding skills, you can find someone with the strong finance skills to help augment kind of some of those things. So we usually get a pretty good mix in our classes, and it works out quite well, right? So thanks, guys. Okay, cool. So little introduction, right? So first of all, who am I? So my name is Robert Grezik. I am the CEO of Lumiwealth, right? That's my job right now. Kind of my background is I've been programming for a really, really long time, over 20 years. The days keep going by, but I was one of those kids that like learned how to code when I was like 12, right? Just for some reason, loved doing it. Started my own software company when I was like 15 years old. You know, did pretty well throughout that. Ended up going to business school, did my master's in finance because I found that finance applies itself very well to the world of computers. So I found that fascinating personally. After that, you know, started another software company. We sold it, right? Made a decent chunk of change there. And then went to go work on Wall Street, right? So moved to New York for a couple of years and worked in one company called Greystone, which is like basically a mortgage bank, right? These guys do like commercial type mortgages, so like 10 million and up per mortgage, right? And while I was there, I was running a team of software engineers that basically built out a piece of software. So my job was like recruiting people, making sure that we're working on the right product, all that sort of stuff. And actually, of course, helping with the coding and making sure that they're doing it properly. So we built out that product that helps people do mortgages better. That product, I think at this point has done maybe 50 billion or more in mortgages, have gone through that. So that's a nice little accomplishment there. And then after that, went to go work for a startup called Voyager. If you guys are familiar with the crypto space, you might have heard of them. They're very similar to Coinbase, right? They're like a cryptocurrency broker app on your phone. I was employee number 5 there, right? So very, very early stage when I was there, like basically nothing existed. We're just like a bunch of people in a WeWork planning things out, right? Ended up helping build out the entire system, and you know, as history goes, right, things move on, and then the company now is public, and we're trading on the market for about $3 billion, right? So it was really nice to help start that kind of company. Hoping that we could do the same thing with Lumiwealth, right? But yeah, that company's done quite well. So definitely proud of that accomplishment as well, right? And then after that, now we're working on Lumiwealth, right? So in that case, what is Lumiwealth, right? So Lumiwealth, our focus is really helping people use software to improve their investment returns, right? We could do that in many different ways, right? And currently, the way that we're focused on doing it is educating people how to code basically software for the finance world, right? So we teach people how to build these trading robots. We also teach you how to use data science techniques to analyze investments. We teach machine learning. We're going to be also teaching soon how to apply software to the world of options, right? So there's a lot of things that we teach in this kind of arena here. We're also working on some products where we're going to be able to take some of our trading robots and put them live on a website where you'll be able to actually invest in them as well, right? So our students actually, they've built some cool bots. We want to take our students' bots and actually put them up on a website where some people can actually invest in it, and the students can actually create their own bots and get paid for these bots that they've created, not just with their own money, but with other people's money, right? Okay, cool. So that's myself and Lumiwealth. Just a reminder, for those of you that were on earlier, you can make sure to follow us on YouTube, right? Our YouTube channel has basically this video, right? So if you want to go find the recording of this video, then you could do so by going on YouTube, searching for Lumiwealth, right? And then going to our channel, the Lumiwealth channel. You'll also find a lot of other goodies on here. We have interviews with people in the crypto space. We have interviews with some very prominent money managers, and we're constantly posting a lot of new content. So if you're interested in the world of technology and how it applies to the world of finance, that's what we're all about. And make sure that you follow us on YouTube to get all that. All right. Okay. Another thing, and I'm going to post this link. Actually, let me post our YouTube channel. And I'm also going to post our Discord into the chat. So you'll be able to see the chat. That's our YouTube channel. And then also in here, I'm going to post our link to Discord. Okay, and post that up there. And what Discord is basically it's our community, right? So you can join our community. In here, you'll get to know, you can get to know some of our alumni, right? So if you're interested in seeing kind of what the result is after you come out of this, we have quite vibrant discussions with our alumni on here. So you can ask people what they think about the classes, that sort of thing. We also have a lot of discussions around different topics. We have a very vibrant discussion on crypto pretty much all the time. So if you want to learn a little bit about that, we have a lot of stocks discussions, right? It's a very active community. So lots of things going on here. So if you want to learn about the world of finance, especially as how it pertains to software, then this is your spot. So make sure that you click on that link that I put in the chat, the Discord link, and you can join the community and you can get to know some people that are current, past, and future students, right? And not just students, actually. Some people even on there that weren't even students. So you can get to know a lot of people in the space, right? Okay. There's also going to be a survey at the end of the webinar. So make sure you fill out that survey. That way we can continue to improve this webinar and also our courses in our company. We're really big on feedback. So definitely fill that out and let us know your opinions. Thank you. Okay, cool. So let's talk algorithmic trading. What is it? Why do we care, right? So first of all, algorithmic trading, for those of you that don't know, is essentially using software to analyze data and to make trades, right? So it doesn't necessarily have to be something that's automatically trading for you, although a lot of people do that. It can be using algorithms or software to analyze data and to give you trading recommendations, right? It could also be that. A lot of people obviously opt to have the program trade for itself. That's what we do. It makes our lives easier. We don't actually have to put in the trades manually, right? But in either case, you can consider that algorithmic, right? So why do we care about this, right? So first of all, it makes us good returns, right? I'll tell you, I have a decent amount of money in a few different algorithms. It's making us good money, right? But we're not the only ones, right? So we have a lot of our students that are making very good returns, right? I could tell you some of our students, I've heard numbers as high as 300% over the past year by some of them. But I mean, they're all doing quite well, right? Or at least a lot of them are doing quite well, the ones that we communicate with, right? But they're not the only ones, right? If you take a look at the hedge fund world, right? Some of these bigger funds, you'll see that all of the biggest hedge funds or most of the biggest hedge funds lately are the ones that use these algorithmic type of techniques, right? So some good examples of this, right, is like Renaissance Technologies, right? These guys manage, last time I checked, around $110 billion worth of assets. Pretty sure it's quite a bit higher now. I haven't updated that number for a little bit, so I'm pretty sure it's quite a bit higher than that. These guys make a 39% average annual return. It's uncorrelated with the stock market and has very low volatility, right? Which means consistently every year, 39%. I think there's only one quarter that they ever lost money in the past like 40 years. It's crazy. These guys are like a powerhouse. They like just basically print money, right? To give you an idea of how much money that really is, okay? So if you put in $1,000 and you invest it for 30 years, you would end up with $24 million after 30 years, right? That's compared to stock market, right? The stock market is around a 10% average return, depending on what time period you look at, right? This is 4 times the stock market, but because of compound interest, it's not 4 times the returns over a long run. It's something like 100 times the returns over a long run, right? If you took $1,000 and put into a stock market, you'd end up with, we could do the math if you guys want. I'll do the math later, but you're going to end up with something significantly less than 24 million, right? You're going to end up with, maybe actually let's do the math, right? We'll do the math really quickly here. So we'll go 1,000 to the power of, times 1 point, let's say 10% stock market returns to the power of 30 years, right? So if we're looking at the stock market returns, you're only going to end up with 17,000, right? So that's a really, really big difference, right? So $1,000 turns into only, $17,000 with the stock market, right? So think about how big of a difference that will make in your life, right? You put $1,000, ends up with 17, right? Versus you put $1,000, you end up with 24 million, right? Really, really big difference when you increase your returns, right? And if you guys work in finance, I'm sure I don't have to explain that too much, but if you guys don't, increasing your returns by, even an extra 1 or 2 or 3% will make a huge impact later on in your life, right? So imagine doubling or tripling, right? And that's basically what Renaissance does, right? These guys are just, they basically print money. It's they have a really cool book too, by the way, if you guys ever want to read about it. It's called The Man Who Solved the Markets. The Man Who Solved the Markets. It's a really, really interesting book about the guy that created, what's it called? Created Renaissance Technologies. And essentially they talk about how they use algorithms to get like really, really good returns, right? The story is kind of crazy. It starts off with them just like, trying to figure out how to do this. And then eventually turns into them having so much money that they're buying mansions that they forget about, basically. Imagine that. Imagine buying a $5 million house and forgetting it even exists. Yeah, that's how much money these guys are making. It's like crazy, right? A really, really interesting book. I'd highly recommend that you guys read this if you're interested in this whole field, right? The Man Who Solved the Markets by Jim Simmons, right? All right. So that's one company, right? That's Renaissance. They're obviously doing very well. If you're making 39% a year, you could even leverage that and make even more, right? Especially considering the risk tolerance or the risks that they're taking on. It's very consistent returns, 39% a year. It's not like you could get 39% a year in the stock market, but you'd be taking insane risks, right? This is like very low risk and very, very well adjusted kind of returns. But they're not the only ones, right? So Two Sigma's doing that, Renaissance is doing that. Two Sigma is another one, right? They're doing very similar. Last I checked, they're like double the stock market's returns very consistently, same sort of thing. Basically like almost no risk involved in their portfolio, which is pretty amazing. They manage some like $60 billion worth of assets. I think it's higher than that now. Citadel is another one. These guys also are just like minting money. They're producing lots and lots of cash. They managed to make 32 billion last time I checked. They're probably even higher now. Bridgewater is another one. These guys use a lot of algorithms to actually analyze data and inform their trading decisions. I think these are the guys, they don't actually allow the computers to trade. They want humans to put in the trades, but they have a lot of computers analyzing the data to figure out kind of what to do, right? And these guys obviously are quite big. Ray Dalio, really making a lot of money. I think they're one of the biggest hedge funds in the world, actually, at $140 billion, right? And then another one, and also obviously Bridgewater doing very well, right? And then D.E. Shaw is another one, which these guys, if the name sounds familiar, there's someone who used to work there called Jeff Bezos, right? Jeff Bezos actually used to work at D.E. Shaw a very long time ago. Obviously ended up quitting, started Amazon, and the rest is history there. But D.E. Shaw is kind of where he cut his teeth and where he got started in this whole space, right? So you're in very good company when you're working with algorithmic trading. These guys are making lots of money. Our students are making lots of money. So definitely a good place to be. right? If you're interested in getting a job at one of these places, the salaries are quite high as well. Base salary starts at like $350,000 last time I checked. And with bonuses can go much, much higher than that, right? So if you're doing this for like a career type thing, also very highly paid profession. This is working at the hedge funds, but even like lower level, not even lower level, but like, just being a data scientist in the finance industry, you get paid quite well, right? So if you're doing this for a career perspective, it's also a very lucrative profession, right? Here's some of our returns, right? So this is one of our portfolios. You could see that last year we did 53% over the year. That compares to S&P 500, which did 17% over the same time period, right? So we got something like double or triple the stock market's returns in this one particular portfolio. I have another one that I could show you here as well. This is one that we actually just started with, right? It's one of our live accounts. This is about 2 weeks ago. We started with 10K. We're now up $400, right? Which is something like, I think the stock market did, 1.5%. We're up 4.3. So we're more than double the S&P 500 over the same time period. And I'll be honest with you, our risks have actually been quite a bit lower. Today's, I think, the first day that we're actually down in like a week, right? We haven't lost any money for a long period of time in this specific strategy. I'm going to show you the strategy later today too. Fantastic. If you back test it, you actually make really, really good money as well. So that's why we decided to put some money into this. This is a new portfolio that's been doing quite well for us, right? So just so you see how that's going. And we're going to keep running this over the next couple of weeks, and we'll update you on the results as we keep going. But based on our back tests, and I'll show you this algorithm today, does double the stock market's returns with about the same amount of risk, right? So to me, that sounds like a very good strategy. And so far it's been working out quite well for us. Probably going to dump more money into the strategy sometime soon as well, right? We have a couple of different things going, right? But this is one of them that I could show you. Cool. All right. So let's talk about the code, and let's show you guys actually some of these strategies working. All right. So first of all, Lumibot is an open source library that we created, right? So if you have some coding acumen, you could actually check out our open source library. When we teach, we actually use this library for part of our lectures, not all of it, right? But a good chunk of it, we're using Lumibot. This thing is quickly becoming one of the best trading bots in the world, right? We have some other competition from things like Backtrader and whatnot, but we're very quickly surpassing them. We now have just added the ability to trade options as well, right? And we're going to be adding the ability to trade futures and Forex and crypto shortly, and being able to back test those. Once we have that complete, this will be the best library in the world when it comes to this sort of thing. So that's something that we've created and we've invested in over time. And it's something that we'll teach you how to use and use in a way that will make you money throughout our courses, right? So not only do you get access to this, but we'll show you a bunch of our strategies and give you access to our strategy library that has a bunch of ones that you could use either out of the box, or you could use and modify and use them for yourself and whatever purposes you want to do, right? Okay, so that's our code. We have a bunch of example strategies. We have a whole strategy library, right? Like I said, if you buy our courses, you get access to our entire library, which just keeps growing and has a lot of cool stuff in there. And it's really easy to like add data sources and brokers and all that kind of stuff, right? So that's kind of our code base and one thing that we teach you with, right? And actually what's powering a lot of these strategies I'm going to show you now. Okay. So I'm going to walk you through a couple strategies. These are strategies. We're actually going to go over a few new ones today because we made a few new ones. I want to show you guys these because they have a lot of really good potential. But I'm going to show you a couple today that I think you guys will find very interesting, right? So let's check this out. So I'm going to switch over to my paper trading account. Okay, so we could run some of these strategies. Also, surprisingly, I'm not entirely sure how, but when our algorithms were running, somehow we made like a 50% return in the past week. Not entirely sure how that happened, but cool. All right, so let me show you some of these strategies. So what I'm going to do is I'm going to start off with one that's kind of fun to watch. It's called fast trading, is what we call it, right? For those of you that like doing the day trading sort of thing, this is basically a way of doing day trading. You can modify this, and a lot of our students do modify this one to do all sorts of different things. So let me run this one. You'll see when we go into the broker, you'll see they'll start trading automatically, assuming all my keys and everything are set up. Right. So there you go. Okay, so see that I didn't touch anything. It automatically bought a bunch of stuff. Yeah. So what this is doing specifically is it's looking at a bunch of different stocks here, right? So let me pull this up here. Fast trading, there it is. So it's looking at a list of stocks, right? So it's this is our stock universe. So 1, 2, 3, 4, 5, 6, 7, 8 different stocks. Okay. It's looking at all 8 of these and saying which one is doing the best right now, right? That's all it's doing is just checking, okay, which ones are going up the fastest right now? Okay, it's a momentum kind of play, right? Whichever one is doing the best, we're going to hold on to that one, right? And then we're going to drop the ones that are not doing well, right? So out of those 8, we're going to hold the top 4, the ones that are rising the fastest, and we're not going to hold the other ones, right? So it's basically we're only holding on to the winners, right? In a short-term basis. And then we'll reevaluate that every 1 minute. You see how it just flipped over there? Automatically figured out, okay, there's a couple that are losing. There are ones that are going up more, and it buys those instead. All right, so only keeps the top 4. You can keep watching this all day long. It will literally just do this all day long. It'll just keep flipping the stocks for you, right? So we'll basically look at the top 4 stocks and just keep going that way. This is for momentum. You can imagine you could change this to be pretty much anything. You could look at different technical indicators. You could look at fundamental values. You could look at news, which I'm going to show you something else in a bit that does that sort of thing. You could use all sorts of different criteria to give you a list of like the top 4, top 5 stocks you want to hold on to, a stock screener or something like that, and just hold on to those. I will automatically do that for you day in, day out, minute by minute, second by second if you want to. All right. Okay, so that's our fast trading strategy, right? It's cool to watch because it will just constantly keep flipping through. There you go, I did it again, right? It just constantly just keeps buying and selling and trading things, right? So very good if you're into the day trading sort of thing, and very easy to take this and modify it to do whatever else you want it to do, right? So that's one strategy. Another strategy I'll show you is we have something that we call debt trading. Okay, so I'm going to run this strategy, and when I run it, I'm also going to be running a back test as well with this thing, right? So what this does, and I'm going to open up the strategy to explain it to you. It's over here, debt trading. So what this one does is basically we'll look at the GDP, the debt to GDP ratio for the United States, right? So basically, are we taking on more debt or not, right? And whenever the government is taking on a lot of debt, we are going to go all in on stocks, right? Whenever the government is not taking on a lot of debt, we'll do what investment advisors recommend is a 60-40 stock and bond mix, right? So we'll go 60-40 in normal situations, and we'll go 100% into stocks when the government is spending lots of money, right? Like what they did recently, right? I'll show you the stocks I'm using. You could use different types of stocks here. I'm choosing to use the leveraged ETFs, right? So UPRO is basically a 3x leveraged S&P 500. TMF is a 3x leveraged treasury bond, right? So essentially we're doing a 60-40, but we're doing it in a leveraged fashion, right? And we're able to move quite quickly because of the algorithms, right? And when we take a look at the returns, we see the performance here, right? So this is me analyzing how the strategy would have worked. It's called back testing. For those of you that aren't familiar, what back testing is basically saying, if I took this strategy and I looked and I did it over the past X amount of years, so in this case, it went from 2012 January 1st to 2020, January 1st. All right. Over that 8-year period, if we had run this strategy during that time, this is how we would have performed. We would have made 30% return on an annualized basis, right? So we would have made 30% a year. That compares to S&P 500, which did 17% over that same time frame per year, right? Our volatility is a little bit higher than S&P 500, right? But not that much higher. And the reason why is obviously because we're using these leveraged ETFs. If we weren't using them, we could reduce that as well, right? So it kind of depends on what kind of risks you're willing to take, right? But the volatility is only a little bit higher than the S&P 500 because we're able to, first of all, trade the debt, and because we're also doing the 60-40, right? So we're able to actually reduce our risk a little bit there. We have a good Sharpe ratio, 1.39, which beats the S&P 500. The worst case scenario, the most that we ever lost would have been 31%. That compares to stock market, which was 18%, right? So about double the stock market's returns, right? For just a little bit more risk, right? Maybe an extra 50% more risk, but for double the returns. So this to me looks like a good strategy and something that we could actually use to make some good money, right? Okay, and you even see the measure here of ROMAD and whatnot. We also, whenever you run something like this, you run a back test, we also print out the graph, and this is what it looks like, right? This is our strategy, debt trading, right? Versus the S&P 500 versus SPY. And we could see that we clearly dominated that. We went for, if we put in $1, we would have made up to 8 by now, or let's say from 2012 to 2020, we would have turned $1 into 8, so 800% return over that time period. Whereas the S&P 500 would have turned only into about $3. So we almost tripled the returns over this 8-year period. All right, so that's obviously very good. You know, some interesting ways to make money there. All right, so that's our strategy. Also, once we ran the back test, you'll see that when we went to the broker, you'll see that actually automatically bought this for us as well. So it's really easy to get this strategy up and running. Literally, I could just like leave this thing up on my computer, and it'll just keep trading. It'll keep automatically doing these things day in, day out. You know, I actually have some of these things running on a server. I could show you guys how to do that too. And basically, it just runs off a server and automatically will just keep trading. You know, doing these things in a very simple kind of way, right? Cool, awesome. So that's 2 of our strategies. So we have like a fast trading, which is like our day trading kind of strategy, right? We have a few day trading kind of strategies they could pick from as well. We have our debt trading strategy, right? Which is also doing quite well, right? And we have a few other ones I could show you here too. So we also have a technical analysis strategy I could show you, a Reddit strategy. So I'm not gonna be able to take you through all of them because we have quite a few. And we're adding to them by the day. There's a few more in production right now too. We have a strategy that uses technical analysis that will basically trade based off RSI, right? So that one does quite well as well. And of course, if you're looking to do some sort of day trading like that, you could use this strategy and kind of use this as a basis, right? There's a lot of different things you can do. It's very easy to use any kind of technical indicator, right? We have a Reddit strategy, which I want to show you, which is actually very cool. I'm going to show you that one next. And then we have a diversified leverage strategy, which I also want to show you. So let me open up here and I'm going to show you our Reddit strategy. This one is definitely one that a lot of people find very interesting. So let me open that one up. It's over here. Okay, and then I'll open up our Reddit. Where is this? I'll keep looking at the Reddit sentiment. Okay. Okay. So this strategy, and I'm going to run it because it takes a little bit of time for it to figure out what's going on here. But this strategy, what it does, okay, is it will basically go to the channel Wall Street Bets. You guys are probably pretty familiar with this if you pay attention to trading. But if you're not, I'll show you what this looks like. This is a Reddit channel, Wall Street Bets. I believe there's like 4 million plus people in this now. It's probably the biggest stock trading anything really in the world, with a ton of users and a ton of commentary. Some of his commentary is a little bit colorful, but it's been known to actually influence the market quite a bit, right? So basically, people, when they chat on here, they're talking about stocks and they're saying, you know, I think we should buy this stock because of such and such and such, right? And then, or we should sell this stock, whatever, right? So people talk about different stocks on this channel, and it has been known to influence a lot of stocks going up. Actually, like the GameStop, for example, if you watch GME or GameStop, shot up like crazy over the past couple months. It's a lot because of this channel, right? So if you're following things here, you could actually get a pretty good insight into what could potentially happen as far as like this whole meme stock type craze, right? So we can monitor this channel, we can look at what they're talking about, and we can be the first people to come in and actually start buying these stocks as compared to other people, right? So without having to like keep reading these comments and whatnot, we're automatically doing that, right? So that's what this program is doing, is it's reading, and you see here, it's extracting from comment. So basically it's reading all the hot posts, right? And going through them and saying which stocks are being mentioned, right? And then based on what stocks are being mentioned, we're also doing something called a sentiment analysis, which basically says that comment that they made, is it a positive or a negative comment? Are you saying, I hate GameStop, I think it's going to crash, it sucks, right? Or are you saying GameStop is going to the moon, we're all going to make a ton of money, right? Like that sort of thing is obviously a positive sentiment versus a negative sentiment, right? And the reason why we're looking at that is because we're saying we want to know what people are mentioning in a positive light, and we could actually invest in that. All right. So here it's going through all these comments. We'll see in a bit. There you go. Okay. It actually returned all this stuff here, right? We didn't, for some reason, Yahoo Finance doesn't have SPCE, which is a little strange that Yahoo Finance doesn't have it. So maybe this is a little bit of an issue right now that won't actually trade. We could easily modify that. But basically what came out is this is what Reddit is saying, right? It's saying 42%, right? It actually just disappeared there on me. Okay. Well, we saw it a second there, right? It's 42%. You know, people were saying Wish, BlackBerry was another one up there. Space was another one up there. There's a problem right now because for some reason SPCE is not on Yahoo Finance, which I don't know why. But because of that, we're not able to trade right now. So I'm going to have to make a little modification to this. But essentially, you know, we'll run this, and what it'll do is it'll keep reading Wall Street bets, and it'll keep automatically buying and selling stocks based on that information, right? And based on, you know, what we think is or what Wall Street Bets is saying is the best channel right now, right? Okay, so that's our Reddit sentiment. And then I'm going to show you one more, right? So unfortunately, didn't trade, but we'll be able to see that if you give me like, you know, 5 minutes or something, I could probably modify it to fix that. But that's okay for now. So so that's our Reddit sentiment, right? We'll automatically trade off of that. Then we also have another one, diversified leverage. This is the one that I actually showed you guys earlier today. All right, and I'll show you why I like this one so much. All right, so I'm going to comment this out, and I'm going to run this. And what I'm going to do is I'm going to do a back test again, kind of like how we did with that first strategy I showed you guys, the debt trading. I'm going to back test the strategy. I'm going to tell you specifically what the strategy does, okay? So this is a strategy inspired by Ray Dalio, right? The guy that runs Bridgewater. And essentially what it is it's a diversified set of assets, right? We have, and leveraged, right? So we have the leveraged NASDAQ here, which is TQQQ. We have the leveraged S&P 500. So we have 20% in the leveraged NASDAQ, 10% in the leveraged S&P 500, 10% in the leveraged Dow Jones, 10% in the leveraged emerging markets ETF, 35% in leveraged treasury bonds, right? So this is bonds. We have 10% of our money in something called the Barclays VIX ETF, which is a really cool one. Basically what it does is it usually loses money, but if there's a market crash, it pops up a lot, right? So for example, 2020, when the market crashed, it went up something like 500% in like a month, right? So this is a very good thing to have in a portfolio to hedge some of the losses, right? So because we're doing a lot of leverage trading, we're able to reduce the risk of this leverage by actually owning this as well, which will offset that, right? So we offset our leverage partly by owning the treasury bonds, partly by owning this XVZ, the VIX ETF. And we also have a leveraged gold ETF as well, right? So we're diversifying quite well, right? And we're adding leverage in, right? So we're getting the benefits of leverage as far as returns go, but we're also, because we're diversified, we're able to reduce our risk. So we're not doing anything crazy, right? You can put all your money into TQQQ and it's done well. But if we ever have a big market crash, you could completely wipe out your entire portfolio, right? So it's a bit of a scary thing to be in normally, right? But because we're leveraged in all these different, and we're diversified in all these different things, we're able to actually make quite a bit of money doing this, right? So that was the portfolio I showed you. We put money in there about 2 weeks ago and already made about 500 bucks. But here it is back tested, right? So when we're looking at this time period from 2012, January 1st to 2021, January 1st. So this is about a 9-year period. Okay. And this is how it performed. Okay. It did almost 30% over that time period. Okay. So 30% a year, actually, I should say, not 30% total, 30% a year it was doing over that time period, with a volatility of 23% and a Sharpe ratio of 1.23. That compares to the stock market, which only did 17%. So again, we have almost double the stock market's returns, right? A little bit higher volatility, right? But, and very importantly, is our max loss was only 33%, which is exactly the same pretty much as the stock market, right? So it might move around a little bit more, but when push comes to shove and things crashed and went really badly, we are pretty much the exact same risk as the stock market, right? Over this period that we looked at, I on purpose made sure that we included 2020. This is actually that crash, right? So how would this have done over 2020? Well, it would have done exactly the same as the stock market. It would have crashed. We would have been down, right? But in the long run, we're making double the stock market's returns using this strategy, right? That's why I love it so much. It's one that keeps your risks in check, but at the same time also gives you very high returns, right? And I'll show you the graph of it here. This is what this strategy looks like, right? Over that time period. So would have turned, there you go. So would have turned $1 in 2012 into 10 bucks by 2021, right? Even despite that big crash in 2020, there's that big crash, right? Even despite that, it would have turned $1 into 10 bucks. So 1,000% return over a 10-year period, or actually not even 10 years, 9-year period, right? Whereas the stock market would have only turned it into 4x, would have turned it into $4, right? So in the long run, we're getting something like 2.5 times the stock market's returns using this strategy, right? Which is also why we have our own money in it, and why I actually really like this strategy. And then when we take a look, okay, so ran that back test, we'll take a look at our broker, and we'll see that it actually did buy these stocks. If we give it a second, there it is. Automatically bought all those for us, and also automatically adjusts, right? So the one important part of the strategy, and one reason why it keeps the risks quite low, is because we put a fixed percentage of each one of them, and we'll automatically readjust when things get out of whack, right? So the reason why this reduces your risk so much is because when one shoots up a lot, like for example, TQQQ has a really good day, right? We're going to end up selling that, and we're going to take the proceeds of that and put it into the other ones, right? So, or vice versa. If one of them falls a lot, we're going to sell some of our other ones and put money into that, right? So what that's doing is it's automatically doing this thing where if the stock market falls, we're putting more money in, right? Which is what you should be doing, right? Like when the stock market falls, things kind of go on sale. It's a good time to invest usually, right? And that's kind of the way that this strategy works. So I actually get notifications in my mail quite often, my email almost every day. It's like it bought this and it sold this, right? It automatically will readjust our portfolio based off of how things have been performing, and that's what gives us that really good investment return when it comes to risk. It's not something, it's not something that you just go out and buy these. You have to like actually adjust these on a daily basis, right? Which is why an algorithm helps, obviously. Cool. Okay. So that's all the strategies I have to show you guys here, right? We have a few more that I could show you, but I think time permitting, right? We're gonna leave it at that. What do you guys think about those strategies? Let me know what you guys think. Feel free to type in the chat or in the Q&A. What do you guys think? And tell me which strategies you like the most, right? And if you guys have any questions, right? And in the meantime, I'm going to talk to you guys about our course and kind of how we actually teach you how to do these sorts of things, right? So this is our algorithmic trading course. You can get to this pretty easily if you just go to lumiwealth.com, right? And then you click on algorithmic trading, right? This is this course. I'm going to actually share this also in the chat so you guys have access to this, right? So this is the course where we teach you how to build this sort of thing, right? And basically, by the time you get out of this course, you're going to have your own algorithms. You're going to know how to build these things. You're going to know how to modify them. Pretty much every student that comes out of our classes that actually puts in the effort, obviously, will come out. And actually, I'm happy to give you a guarantee even that you'll come out and you'll have a trading algorithm working by the end of the class, right? That's the entire point of this class, right? So the way that we teach you, we have 3 different plans of how we could teach you how to build these bots, right? We have a self-directed plan, which basically gives you access to our like past recordings of our lectures, right? So you can see past lectures, right? And you could see kind of how things were done in the past, but it's kind of your responsibility to go through and do the homework and all that kind of stuff, right? You're not really part of an interactive environment, but you do get access to all the recordings, and you get access to our community as well, right? Our live classes, this is our most popular bundle by far, right? This basically, what it is it's a class kind of like this over Zoom, right? Where the instructor's teaching a class. And in the case of algorithmic trading, it would be me teaching this class. And basically, you're in this class in Zoom while the instructor is teaching. You'll be able to ask questions throughout, right? So it's very interactive. So you can ask questions. If you get stuck anywhere, you'll be able to get a lot of feedback. So, you'll go through, you're doing some homework, okay, how do I deal with this? You get a lot of that sort of feedback, right? So it's a lot better than just, staring at a screen of a bunch of lectures, right? You get the interactive component, you get to ask questions throughout the class. We also do a lot of presentations, so you'll be able to present your work, right? We do a lot of, what's it called? Workshops, where people will share their screens and we'll go over different things with people, right? You can share your screen and we'll like, okay, how do we do this? How do we do that? Right? And we'll like make sure that we're all working on things together. And you also get to know a lot of the other students, right? So because you can work together as a team, right? So you could team up on different projects. You can obviously get to know each other through the class itself and communicate. So it's a very interactive, it's a very great way to learn, and definitely our most popular plan by far is the live classes, right? Then we also have, and by the way, everything in live classes, you get access to self-directed as well. And live classes, it's lifetime access, right? For not only the class or the specific session that you took, but you could retake the class as many times as you want, right? So we have some people that, we're taking the class and something happened with work or, health kind of situation or whatever, and they weren't able to continue. They took a break and they were able to join our next session, right? So live classes are very flexible like that, where you can retake them. Okay. Then the project help and tutoring plan. What this is basically everything from before, right? So you get access to the live classes, you get access to the videos, all that kind of stuff, right? You get access to our community. And on top of that, what we're going to do is we're going to sit down with you and actually help you build these bots, right? So we'll spend a lot of time on the phone with you, or we'll get our own developers involved as well. And we will actually help you build out these bots, right? So not only are you going to be working on them, but you're going to get that extra help, right? You're also going to get a chance to do a lot of one-on-one time, right? So you can communicate with the instructor and if you get stuck anywhere or if you need help building out your bots or whatnot, you can go through this plan and get a lot of extra help. Right? Here's the pricing for all those plans. So self-directed is again the one that you just get access to the videos, you get access to our community. It's $650. We have a lot of video content that you can watch. Right? Our live classes gives you access to all that video content to the community, and then also is live over Zoom, where you get a chance to ask questions from the instructor. You get a chance to work with other students. It's very interactive, and you get a lot of help building your stuff out, right? And then project help and tutoring plan is the one where essentially we're going to be, not only are you going to get access to live classes, you're going to get access to all the video recordings, you're going to get access to community, you're going to have lifetime access to any classes going forward if you want to redo it. And then at the same time, we're also going to be helping you build these bots, right? So we'll get on the phone with you one-on-one if you need any help building these things out. And then we'll also be able to just do one-on-one time if you get stuck somewhere, if you need some help on any kind of programming related stuff. We'll spend a lot of time with you to make sure that this thing gets done well and done quickly without a lot of hassles. So we'll help you out a lot with this project help and tutoring plan. Okay. These all, by the way, have payment plans. So you don't have to pay this all up front. You can pay over 3 months. We can also, it's also possible for us to do a longer payment plan if necessary. Right. Okay, cool. So that's the different plans. You could read through this page. There's a lot of interesting information about like what you get out of it and whatnot. And then we have our course curriculum, right? So what this course covers is it's basically 3 parts to this course, right? The first part, so even if you don't know how to code, we'll actually teach you the basics of data science and Python within this first part, where we'll walk over, how are you going to get this stuff set up on your computer? We'll walk you through like a nice introduction to Python. We'll introduce you to pandas and data science, right? How you basically are going to be doing a lot of this analysis. I know people that even people that know how to code, when they go through this, they still learn a lot because we teach a lot about the data science side of things as well, right? We'll teach you how to load CSV files. We'll teach you how to do graphing, all that kind of stuff, right? So a lot of the data science will kind of get you up to speed pretty quickly, right? And then throughout that first part is we do a lot of homework assignments where you'll get a chance to practice and get better at all this data science and Python stuff. And that first part, by the way, each part is 4 weeks long. So the whole course is 12 weeks. First part is 4 weeks where we introduce you to Python and to data science. The second part is also 4 weeks. And this is the part where we really get deep into the finance side of things, right? So even if you're like the star coder, this is the part where you're really going to be learning a lot about how to apply basically coding in Python to the finance world, right? So we're going to teach you how to download and analyze economic data and stock data. How do you get that information down? What APIs you're going to be connecting to? How are you going to analyze that data once you have it and come up with some sort of conclusions, right? To help you build out some of these strategies, right? So we're going to be doing that. We're going to be talking about performance metrics, is how you're going to be evaluating if your strategy is doing well or not. We have some code for you there, so you could figure out, okay, this is how you calculate compound annual growth rate or standard deviation, max drawdown. We'll show you how to deal with all that, what all those mean, and how to apply it in a financial in a coding aspect, right? And then we're going to get really deep into back testing, right? So back testing, we're going to be talking about essentially what I did there for you, where we were able to take our strategy and go over a 10-year period, right? Or a 20-year period or a 30-year period and see how your strategy would have performed over that time period, right? So we're big proponents of first back test your strategy, make sure it's something that works, something that over a 10, 20, 30-year time period did very well. And we're going to make sure that those strategies are working well before we actually even go ahead and start trading, right? For us, we're really big proponents of a three-tiered kind of approach to algorithms. Is first you back test, make sure that it's working well on your back tests. Then you run it on paper trading, make sure that it works well with fake money and everything's working properly. And then we run it live after that, right? So we're big proponents of that. So we teach you first that back testing side of things. Yeah. Throughout this part, you also do a lot of presentations. So you'll see other people presenting some of their research, right? You'll also be able to present some of your research and get some feedback on it, right? So throughout the second part, there's gonna be lots of presentations and you're gonna see lots of other people's work and essentially be able to give comments and get comments from others, right? So part two is really all about, applying data science to the world of finance, right? Or applying coding to the world of finance. Part three is where you're actually going to be building out your bot that's working, right? So in part two, when some people actually have even bots working in part two, right? But in part three, this is where we really focus on, let's get your bot working, let's get it trading, right? And by this period, by let's say week 1, week 2, you're going to have a trading bot working on your computer and hopefully already have traded a couple of trading days or a couple of weeks and had something working there, right? So this is really all about making sure that you have a bot working on your computer. And we're going to be showing you throughout this entire process, by the way, lots and lots of different strategies. We're going to show you how they work. We're going to give you lots of example code that you could use. If you want, you could just take our strategies and use them. You could take what we have and modify it, and we'll walk you through how to do that. And we show you lots and lots of different examples of basically how to backtest and how to run these bots, right? Okay, so we're going to be doing lots of these things where we show you lots of different examples of different bots working, right? And then again, also throughout this part, you're also going to see a lot of people doing presentations as well. So you're going to see how other people's bots are doing and what ideas they have, and potentially share code and work on things together, work on new bots together, right? By the end of this part, we also cover machine learning a little bit. We have one class on this to show you how to set up machine learning, which is basically like artificial intelligence to trade, right? So we'll go over a little bit of machine learning there in the fourth or in the last class of this class. And actually, we even have an entire other course, if you're interested in it, taught by a very smart guy. You can actually take a look at it up here. We have another course here, machine learning course, where it's taught by another instructor of ours, Greg Tanaka. And it teaches you how to essentially use machine learning to trade, right? A lot of people actually buy these two courses together. They'll buy the algorithmic trading and the machine learning course together, just because it allows you to really take your skills to the next level. Not only will you know how to build the bots, but you'll learn how to build very smart bots using artificial intelligence that can really make you some good cash, right? So that is the machine learning course as well, right? And we cover a little bit of that in our last lecture, right? So you kind of get your feet wet when it comes to machine learning. Okay. All right. So that's our curriculum. These are the classes that are coming up soon, right? So we have 2 upcoming classes. We have one starting in August, which starts on August 25th. Okay. We have an early bird special going on right now. So if you want to sign up for it, you actually get a 20% discount as an early bird, right? The course lasts 12 weeks. We recommend 8 to 12 hours per week. The actual lectures are about 2 hours long, and they're every Wednesday night at 8 p.m. Eastern or 5 p.m. Pacific, right? So again, that's starting August 25th and going for 12 weeks long. Then we have another one that's starting on September 30th. Same thing, going for 12 weeks, about 2 hours of lecture per week. And you have, we recommend about 8 to 12 hours of learning per week, right? And that's every Thursday at 8 p.m. Eastern or 5 p.m. Pacific. So the August one is every Wednesday night. The September one is every Thursday night, right? Okay, and then throughout the course, you're also going to get, you're going to be working on 2 different projects, which is analyzing investment strategies, and you're going to be building out a live trading bot. So by the time you get out of this class, you're going to have a working trading bot that's hopefully making you some good money and making you some good returns, right? And then here's, if you want to read up about me a little bit, you can read up about myself here. And then we also have testimonials here. We have a few more to add in, but you could actually watch some videos by our past students and see how they benefited from the course and how they did with it, right? So you could watch those testimonials down here, right? Okay, so that's our course, our algorithmic trading course. Any questions around that? right? And another thing I want to mention too is our courses do sell out quite often, right? So make sure that you don't wait till last minute because they do sell out. And actually the August one right now also has an early bird special. So if you want to get a discount, I believe that's up until July 11th. So you only have another 2 or 3 days to get that early bird special. All right. Cool. Okay. So any questions before we finish up for the day? I'll give you guys a few seconds here. I know sometimes it takes a little bit of time to type out. All right. Okay. Well, it was a pleasure having you in the webinar. Thank you very much for attending our webinar. It's always a pleasure having you guys around, and hope to see you guys in our classes. It's definitely some really cool stuff, and let's make some money together. All right. Yeah. All right, guys. Have a great day. Thank you very much for attending.